Let's then introduce the guests who will be joining us today on the show. We've got Michael Kurtz, who's the Chief Asia Equity Strategist at Nomura. And we also have Ashwini Gujral, Fund Manager at ashwinigujral.com, joining in to talk to us about the technicals of the markets. Gentlemen, good evening.
Ashwini, let's start the discussion with you on a net-net basis. How have you, in your mind, how do you think market is going into this event of RBI policy? What exactly is the market pricing in right now? Looking at how we've been not being able to even stick above the 6150 mark today, that was also given in. So what exactly are traders, approaching the market with?
Well, what makes the markets difficult is that it responds to the same thing differently at two different times. So last time, because there was no tapering, you had a 20% rally. Chances are that market may not react similarly this time as well. The reason for that is that you are already at 6200 and not at 5200. The other thing is that it's expected that these guys will not taper. So if something expected happens, the reaction is much more muted. But the market is ready for some sort of a reaction, and in case news is favorable, you will get that 80 to 100 point reaction. But it will be interesting to see whether we are able to build on those gains. Chances are, post that initial upside, the market should get back towards the lows of 5950, 6000.
Okay, that's of course the word coming in on the technicals of the markets, but let's also chat with Michael Kurtz then. And Michael, I want a slightly longer term perspective from you. And of course, if we talk about emerging markets compared to the developed markets, do you think that we'd see the emerging markets outperform the developed markets in 2014?
I think rather than, sort of treating all emerging markets as one unitary asset class, we have to start differentiating within the emerging markets. So while EMs overall probably will underperform, within the EMs we could have some very strong performers and some continued relatively weak performers as well. So we are underweight the EM asset class in Latin America and neutral in emerging Europe. But here in Asia we're actually somewhat overweight, albeit with a very strong preference for the EMs that have more of an export component rather than the sort of heavily domestic emerging market stories.
Ashwini, how are the charts of these two large caps showing, HDFC Bank and Reliance? Reliance, of course, seem to be taking some support at the 200-day moving average, but these two have really, brought the index down overall. Reliance has been weak for a couple of days now. Which one looks weaker than the other?
Which two stocks are we talking about?
Reliance and HDFC Bank.
The Reliance has broken its 200-day moving average, so that's way lower, in terms of weakness than HDFC Bank. Chances are, the way it's going, Reliance could head towards 790, 800. HDFC Bank also seems to have broken down from some sort of an uptrend. That's been, kind of ranging between, broadly 600 to 800. So chances are that even here, some sort of a downtrend is likely to begin.
Okay. Michael, let's also talk about a recent report of yours where you said that Asia's policymakers have an opportunity to shift their focus from growth back towards financial stability. But in case of India, which is all set to, of course, go in for elections in 2014, policy might take the back seat. Is that why you expect growth to lag in the country?
Well, India's lagging growth is really a function of some very deeply entrenched structural problems with the economy. Most importantly is the almost complete absence of investment now in India, partly because of the sort of echo effect of the anti-corruption investigations of several years ago, and partly because of the persistence of very high interest rates in light of India's structural inflation problem. So growth is probably likely to stay low, although in India we think GDP at this point is probably at least bumping along the bottom. More interestingly, from a policy perspective, is going to be whether or how the new RBI governor, Raghuram Rajan, is able to deal with this structurally entrenched inflation. And then looking beyond the national elections in May, whether or not a new government, or for that matter, any persistence of the existing ruling coalition, may begin to try to attack India's structural growth problems from a reform perspective.
Let's talk about the big macro event which is lined up for tomorrow, the RBI's mid-quarter policy. Of course, yesterday after the WPI inflation came in much higher than what the street or most of the economists were discussing about, expectations on the street have also increased, that compared to just a 25 basis point repo hike, perhaps the policy could actually bring in a much like a hawk's eye kind of a commentary coming in from our own RBI governor. Even the window could be left open even into January meet. If that is the case, which comes in, Ashwini, do you think the market would react negatively if there is a much more hawkish commentary coming in?
I mean, what more hawkish can you get? I mean, rates will keep going up. I think all that got discounted once you had the inflation numbers. See, markets react before the news, not after. So chances are that 25 basis points is in the bag. If it gets any worse from here, then maybe Bank Nifty could fall another 100, 150 points. But basically, the entire fall from 12,200 to 11,200 has discounted all of this.
Okay, Nipun, getting a perspective from you as well. It seems like that 25 basis point hike has probably already been factored in from the markets. If we do have a number that's much higher than that, do you think we could see some reaction come in both on the Nifty front as well as probably on the Bank Nifty?
Sure. I think largely a 25 basis points cut hike has been factored in. But what's important is the kind of commentary that comes in along with the potential hike that could be there. If it's extremely hawkish, and the RBI has been constantly talking about extremely high inflation levels, there just could be a higher repo rate hike that could be there, which could be 50 basis points. But if you really look at it from an event point of view, clearly, beside the RBI policy, that the taper announcement is something that's going to be looked at very closely by the market. So clearly, that's something. RBI policy in isolation is not something that's going to be looked at, even though that could add a fair amount of volatility. In terms of inflation, if you look at it, really food inflation is the one that's really high. You haven't seen manufacturing inflation being so very high, which means that interest rates are not necessarily the only solution, or hike in interest rates is not the only necessary solution for reduction of food inflation. So clearly there isn't too much of expectation of a 50 basis point repo rate hike. But if that does come about, that would be negative, not just for the banking sector, but also for a lot of the sectors where working capital is, which are working capital intensive. So you really have also a lot of the interest rate sensitive sectors. So you have the autos, the real estate, the infrastructure, and a lot of those where you're having a fairly high interest cost or a fairly high amount of leveraging or borrowing that's there on the balance sheet. So a lot of those industries likely to get affected. So yes, clearly if there is a very hawkish stance or a repo rate hike beyond the 25 basis point, that could be fairly negative for the market.
Michael, at Nomura, what are you expecting from RBI's mid-quarter policy meet tomorrow? And how do you actually see the rate cycle panning out for 2014?
Well, there's certainly additional upside risk to Indian interest rates, and I think, frankly, that's the right thing for the RBI to do. We don't necessarily see one tomorrow, but I think what's important is that the Indian central bank under Rajan is beginning to focus much more on currency stability itself. With currency stability, ultimately becomes more stability in terms of cross-border capital flows. Investors are much less likely to pull out of the market if they have more confidence that the currency will remain stable. And of course, at the same time, with currency stability over the longer term will come more credibility for policy and ultimately lower inflation expectations. So If we do have to pay the price of a little bit more upside on interest rates in order to achieve those longer-term positives, I think that those would be interest rate hikes very well justified by the outcome.
In fact, people are beginning to talk about Nippo and how if we do have a substantial rate hike come in, it's going to create further stress in the corporate system as well, because we could be seeing a rise in the stressed assets. We could probably be seeing and of course the corollary would be that your interest coverage ratios would start declining. In light of that, do you think that the recent upsurge that we've had in some of these mid-cap infra names, capital goods names like a Voltas or a Crompton, we could see some of these stocks as well give way?
Sure. If the direct impact of all of these interest rate hikes is clearly also on the capital goods space as well. You aren't seeing any turnaround as far as the investment cycle is concerned. Your credit growth isn't growing as fast probably as has been anticipated over the last 2 or 3 quarters. There has been growth, but not really at the pace at which it's being expected. Clearly, highly leveraged companies and the infra companies and the real estate companies clearly fall into this category, would get affected. They might not have significantly incremental interest costs on the old debt, but any incremental debt that's being taken is that's likely to be taken is going to be a high cost debt that is there. You aren't finding too many cash-rich companies that are around. There are quite a few in certain sectors like the IT. Maybe to some extent in pharma, but you aren't seeing that across the entire space. So you've seen a run-up that has happened in some of these infra companies, probably more coming out of the anticipation that post-elections there could be faster decision-making that could happen and a lot of projects would get actually executed and implemented. So in anticipation of that, this rise has happened for an event which is still a few months away. And where again there is a fair amount of uncertainty in terms of what the result could finally be. Those are companies and stocks and sectors where you could see a bit of profit booking if the stance is really hawkish and there is a potential that the market sees that this is probably not the end of interest rate hikes, and right. You could see probably another one that could be happening right. in the first quarter. So under that possibility, clearly a lot of these companies would be under stress.
Right. Ashwini, what to your mind is happening in Z? Because, in respect of the overall market sentiment or mood, that is one stock which continues to witness very high volume trade and is surging to new multi-year highs.
Well, Z is, one of the strong media stocks other than PVR. And clearly in this entire correction, Z has only moved higher. So once we get past 285 to 90, chances are that we are heading towards 325, 330, and this is one of the strong stocks that people should participate and keep in their portfolios. Overall, I think a rough target, the only target that is left is probably the 2001 highs, which are really euphoric highs for Z. Other than that, I think it is trading at multi-year highs, and those highs were about 485. So I wouldn't be surprised if over a period of time Z gets to those levels.
Let's also get you a sense of some key stocks that you should be monitoring for tomorrow's trading session. Navneet's here with a list of the same.
Well, one long and one short call is coming from the dealing room. On the long side, you have Arvind, where dealers are suggesting to go long, basically on back of technical trends. Well, if you look at this counter, we've seen some kind of cash-based buying taking place in the last 2 sessions. In fact, alone on Monday on NSE, you saw about a cash delivery of 15 lakh shares. On the future side, also open interest surge today. So on back of that, dealers have suggested to go long on Arvind. Today also the stock ended the day higher by about 1.5%. On the short side, Idea is the shorting candidate. If you look at this counter, it has fallen for the last 5 straight trading sessions, and the dealers are suggesting to go short because there is a buzz in the market that there could be a bulk deal which could happen in this week itself at about 155 to 160 rupees. And well, if you look at this counter on YTD basis, it has given good returns of about over 60%.
Thanks for that, Navneet. Ashwini, what are your top recommendations at the current juncture for markets?
Well, Apollo Hospital is a sell with a stop of 90, target of 76. Canara Bank is a sell with a stop of 250, target of 236. And Bharat Forge is a sell with a stop of 314, target of 298.
Okay, so it's a clear short bias coming in from Ashwini right here. Of course, 3 areas, that's what he's suggesting. But let's also talk about, what's going to happen in the next couple of days. In addition to the Reserve Bank of India, we also have the US Fed that will be meeting tomorrow. So our markets would absorb that only on the 19th, of course. So, Michael, do you think that countries like India are better prepared now to absorb the taper trembles?
Unfortunately, I think for much of Asia, the time gap, if you will, between the summer tapering episode and the imminent tapering episode has been too short for policymakers to really make substantial progress on structural reforms that typically take a very long time to address. In India's case in particular, there has been a change of personnel at the head of the central bank, and clearly the new RBI governor is enjoying a pretty strong honeymoon period, I guess you could say, with investors. There's a perception that he is trying to implement a kind of a regime change at the RBI, in which he seems to be focusing much more on currency stability specifically. And I think for the time being, markets are sort of taking him at his word. But at the same time, we have seen the rupee pull back a bit in recent weeks as the taper begins to become a front burner issue again. And I think India is going to remain somewhat hostage to the outlook for tapering. The greater hope, I think, not only for India, but for the other current account deficit plagued Asian markets, is that the outlook for treasury yields and for tapering going forward may already be pretty well discounted at this point. Remember, over the summer, markets were taken by surprise. But since then, we've now had 6 or 7 months to discount and prepare for the tapering. And of course, over the summer, U.S. Treasury yields rose by 130 basis points in the short space of about 3 months. We're not looking at anything like 130 basis points of additional upside from where we are right now.
Right. Nipun, from the fundamental viewpoint, what are the stocks which you have on your radar for the medium term?
Well, clearly we're looking at sectors and stocks where aren't really affected by interest rate movements or by inflation. At the same time, given the possibility that there just could be a further erosion in the value of the rupee, or there could be currency instability, export-oriented industries. In both these categories, really, you do see mid-sized IT companies and pharma companies which are likely to benefit, which have been benefiting over the last couple of quarters, 2 or 3 quarters, and really expected to benefit further. Clearly, these sectors seem to have, at least the IT sector seems to have bottomed out in terms of the challenges that they were facing. So both of these sectors and companies in these are opportunities we are looking at.
Okay, so defensives is, of course, to be bet on for the near term. Thanks very much then, gentlemen, for taking out the time and joining us.